Well, let's talk about HDFC Life Insurance, right? The stock's down, subdued performance in the fourth quarter. Total premium saw single-digit growth, while total and retail APE also came in lower for the insurer. My colleague Yash caught up with Mr. Vibha Padalkar, Managing Director and CEO of the company, and they talked about the performance. Yash began by asking Ms. Padalkar about which particular sector did not perform as planned for them in the quarter. Listen.
I want to clarify that it went exactly as it was planned. And let me explain. We had the budget changes on 1st of February last year, and there was a sunsetting of above 5 lakh premium ticket size that were going to become taxable with effect from 1st of April. As a result of that, and in a way it might have been a fire sale, our March, and especially last 15 days of March, we got an incremental premium income of 1,000 crores, which we had explained and we had carved out to say this is an additional amount that has come in, and we had a supernormal growth and hence a base effect. So if I were to just deconstruct the numbers a little bit, this is for the fourth quarter and then consequently for the full year. Actual growth in individual APE was -6%. However, if I back out the 1,000 crores, then growth was 20%. Same thing or similar for the standalone month of March. If I were to look at 2-year CAGR, again for quarter 4, that was about 22%. So again, absolutely in line with our expectations. What does that translate to a full year? Individual AP without adjustment was 1%. And if you dial back, that's exactly what I had said, to say that we will be flat on an unadjusted basis. And if I back out the 1,000 crores that was incremental revenue, we will have double-digit growth. So we ended at 11% for the full year on a retail AP and 2-year CAGR of 14%. So all of that is absolutely in line in terms of growth. In standalone quarter 4, NOPs on an unadjusted basis grew by 14%, and on a full year basis, number of policies grew by 11%, as against being flat for the previous 3 years. So we've had very good traction in tier 2 and 3. To give you some numbers, on an unadjusted basis, we grew by 1%, like I said. Against that, the tier 2 and 3 grew by 13%. So again, very meaningful inroads that we have managed to do, being fairly margin agnostic between tier 2 and 3 and tier 1. So there too, we did well. So to summarize, growth is very much in line with our expectations. If we back out the additional 1,000 crores of inflow that we got in the last 15 days of March, we managed to make significant inroads as we had desired in tier 2 and 3. We also managed to grow the number of customers by double digits.
As far as AP itself is concerned, FY24 for the full year, if I look at the number, you had guided for about mid-teens number, 13 to 14% growth is what you had guided for. Now, if I take what happened in last year and what happened this year as is, then the number is absolutely flat. In that context, you sort of missed that guidance. What I want to understand from you is that was that guidance given keeping in mind about carving out this 1,000 crore, and in that case, is it as per what you had expected?
Absolutely. And if you look back on any of our previous communications, especially on analyst call, it was always double-digit growth, backing out the 1,000 crores of additional inflow that came in the last 15 days. So the double-digit growth was after carving out, and we have ended at 11%. Now, it could be instead of 13%, we have ended at 11%, possibly. But we believe that 11% that is rich in terms of protection. So protection, for example, has grown by 27%. So the quality of that growth also is fairly good, and we are reasonably satisfied with having reached the 11% growth.
Okay. Another thing that I want to understand from you, and of course for the full year FY23 and FY24, the impact of taxation of course came on large ticket savings policies which were more than 5 lakh rupees of premium annually. Just to look at the numbers in terms of how things have changed for an insurer like you, out of your total book, what was the percentage or the share of these large ticket savings policies in FY23? And now as we end FY24, where does that share stand in terms of the percentage number?
Yeah, because of the skewed nature of growth. And before I come to the percentages, let me clarify. Policies in financial year 24 that were below 5 lakhs have grown by an extremely satisfactory clip of about 19%. We ourselves, frankly, did not expect, but our inroads into tier 2 and 3, our granular approach, our selling to more customers, like I mentioned, 14% growth that we saw in number of policies meant that our below 5 lakh ticket size grew by 19%. In fact, that growth, like I said, has also been a rich growth because of continued growth in protection. Now, in terms of percentage, there's been degrowth in above 5 lakhs. So mathematically, we had said earlier that 10 to 12% was about the impact of above 5 lakhs. So that's come down to low single digits now.
So the industry, in FY24 grew at about 13-15%. 15% is the number that, in that case, if that growth continues in FY25 as well, 15% APE growth on retail and total APE is what we could see HDFC Life as well.
Yes.
Okay. Now let me come to the value of new business. Here also the guidance which we had was about mid-teens growth for FY24. FY24 we see a cut with whatever impact that we have of about 5%. For FY25, since VNB and the constitutes of it would be in your hand, what kind of growth do you expect in FY25 on the VNB side?
I just want to clarify in terms of our new business margin for between FY24 to FY23. FY24, we ended at 26.3% margins. The previous year, we had 27.6% margin. So there is a delta of 130 basis points. Of the 130 basis points, 70 basis points is just, again, the 1,000 crores. You had 1,000 crore uptick, and the incremental margin that we got is the 70 basis points. 40 basis points is because of euphoric markets that we have seen in towards the end of Q3 and Q4. And so our unit-linked proportion did go up in Q4 from 90% to about 35%, and thereby the dilution in margin. A large part of that dilution was made up by higher protection, but nevertheless, net dilution was about 40 basis points. So 70 basis points because of the 1,000 crores and 40 basis points because of the unit-linked proportion. And you would be able to triangulate this as well, because if you remember, just in standalone Q4 of last year, our value of new business grew by a whopping 69%. That itself showed that the 1,000 crore impact had come into that. And so I'm just backing that out to say that we are fairly range bound in terms of where we would have ended had the 1,000 crores not come in. Now, moving on to your forward-looking question in terms of where we should be, we discussed just now that we will be on the upper end of growth, the sectoral growth. Similarly, our VNB should be in tandem with that level of APE growth.
A little bit on the distribution side as well. As far as your total APE is concerned, in FY24, what was the share of HDFC Bank which came to that in current financial year? How do you see that share moving by the end of FY25? And what growth do you expect in terms of sales that come from HDFC Bank in FY25?
So HDFC Bank was about 48% of our retail APE. And what we don't target or pin to is what should HDFC Bank be as a percentage. I want all of my distribution channels to grow. And so I don't want to, again, pin something. And each one could grow at a different pace. And what percentage is a particular channel is an outcome, mathematical outcome of that. However, what I do want is that my counter share at HDFC Bank to continue to go up. It has gone up fairly handsomely to touch 63%. This is on the entire basis. And if you remember, really discussions started happening after the merger. So this is about 8 months of this business has given us a full year target of a full year counter share of 63%. So hopefully, with coming closer and working very closely with the bank, we continue to inch up. However, it is very possible that my agency channel grows faster than HDFC Bank channel.
You know, it's a very nice bounce which has come through. That's HDFC, of course, HDFC Life in focus. Stock